Okay, friends, welcome back to the channel. I'm delighted today to have one of my good friends and partners, Brian Felhandler from UWM. He's a senior national account executive to share with us about real estate, about them as a company, UWM, and kind of the outlook for the next year or two in real estate. So, Brian, thanks for joining us.
Absolutely my pleasure, Aaron. How are you today?
Doing awesome. Doing awesome. It's a beautiful day. A lot to be thankful for, and a lot of, I think, in spite of the times that people are saying in mainstream media, I think there's still many great things to come in real estate. Right?
I couldn't agree with you more, 100%. So no, this is good stuff. The sun is shining, feeling good, and happy to be here for sure.
Super. Well, yeah, I mean, before we jump into it, I just maybe tell the audience a little bit about yourself and about, UWM and who you guys are.
Sure. Well, I have been in this crazy mortgage business for quite a number of years, and it's interesting because it does have a connection to the roots of UWM. So, and what I mean by that is I'll start with the seed that became UWM, United Wholesale Mortgage, and that was a company called Shore Mortgage, and they were just a little mortgage shop here in Birmingham, Michigan. And they started in 1986, and I don't know how many folks they had when they started, and for the first X amount of years. But in 1996, a young, fresh-faced kid named Brian Felhandler started a journey into the mortgage world in January of 1996. So that's when I actually got into this mortgage biz. And I had a short career at Shore Mortgage, and then I was recruited, if you will, by a real estate office that liked what I was doing, and I became very, very entwined with the real estate community, and was an in-house lender for many, many years, working out of Century 21 offices and some others as well. And basically was an originator. I did loans. My clients were the public, and enjoyed it quite a bit. And I eventually found myself being recruited by UWM, United Wholesale Mortgage, and I had no clue who those folks were. And as I was talking to the person that was interested in me coming aboard, I realized the connection here, and that actually Shore Mortgage became United Wholesale Mortgage. And essentially, Shore Mortgage became United Shore. They had a retail division, so you had loan officers, and then they did open up their wholesale division, which is United Wholesale Mortgage. And at a certain point, after the mortgage craziness and crash that happened in 2008, 2009, it was decided by our president and CEO, Matt Ishbia, that, you know what, we're going to focus solely on the wholesale division, no more retail. And what that means essentially is that we are, in my opinion, and a lot of other folks, that we are the truest partner to the mortgage broker community. And what that means is that we partner with loan officers, originators like yourself, Aaron, to be able to afford them the ability to really control their business and to be able to deliver the best client experience. So we've been the number one wholesale lender for, oh gosh, I don't know if it's 8+ years at this point. And as of last year, we became the overall number one lender, mortgage lender in the country. And it's pretty exciting because everybody else has a retail side and a wholesale side, whereas we only have the one. We're simply and strictly wholesale. And so it's a wonderful place to be, and we afford originators the ability to, again, give the best and absolute optimal client experience to their folks. And so it's a very, very great partnership. But in a rather large nutshell, that's me, and that's UWM.
Love it. Yeah, I was going to say one of the things that definitely I want to do on this channel is, provide really good information, no nonsense information to the public. And I feel like there's perhaps like some space here. One of them is like, people may be wondering, like, what's the difference between a company like UWM, right, that doesn't interface with the public very much, and somebody like a big, gigantic bank down the street where they've got a big location? Can you maybe describe that, like, for the
Sure.
public to understand, like, what are those differences there?
Absolutely. So, the easiest way that I could explain it, and that's an excellent question, is when you're looking at a big retail bank, a big retail lender, what those folks have available is what they have in under their roof, so to speak. So most of the time you're going to find that they can't be all things to all folks. They don't have all the options, and sometimes the process isn't as swift, isn't as sleek, and not as user friendly to the public. Now, a mortgage broker, on the other hand, has the luxury of having the ability to go to any wholesale lender to deliver the absolute, not only best client experience, but to deliver them to maybe the particular mortgage product that they're looking for. So what it does is it actually allows folks like yourself, Aaron, to be able to offer your clients a wide array of mortgage products, mortgage options, and you're not held to just what you have again with one company. So a mortgage broker allows you to have, the options, whereas a retail lender is going to have only what they have. They're not necessarily going outside of their box. They're not going outside of their four walls, so to speak.
Love it. Yeah, I think that's a big distinction, because perhaps the public doesn't know those differences, right? They're like, well, why do I have to speak to a broker versus just talking to either a direct lender, as they say, or a bank that's down the street or something. And I love what you said there about the client experience, because in my experience so far working with UWM, that to me is the most important thing, is giving clients the best possible experience in all aspects. And of course, one of those ways is, as you know, Brian, being able to be available 7 days a week, all the time. If my client needs to call me and I need to get information, I do that. And then, for example, you and I will interface even on the weekends, like right now when we need to.
Yep.
Whereas a lot of places just can't do that, right?
And that's something that is absolutely, I think, important to stress, is what you just said, is that, simply put, a mortgage broker is someone that's going to be available 7 days a week. And that is the best way to operate. Why is that? Well, I mean, think about it. The average person that's getting a mortgage, they're working, right? You got to have a job. Most of the time, you got to have a job. You got to have some income to be able to show to qualify for a mortgage. Well, these folks are working. So it makes complete sense that a lot of times they're not available to the evenings. They're not available until the weekend. And with that being said, you're going to find it very difficult to maybe get that kind of service with the 9 to 5 situation that you would expect maybe in a bank and a big retail lender. So somebody like Aaron, absolutely 100%. You need him on a Sunday, he's got you. You need help on a Thursday evening, he's there for you as well. And with us at UWM, our goal also is to be available as well, because that availability is so key. Because as far as I'm concerned, as a national account executive, bottom line is this: if you have a question for me because you need to get back to your client, that's where I'm at. That is my goal. My goal is to be there for my clients, who then in turn can deliver the best experience, and all the information, get them to where they need to go, their goals, what have you, in the most timely manner, with the least amount of bumps in the road. And bumps happen, but ideally, if we can do this in a very fast and easy way, if there is a sidestep that has to be taken because we need to get clarification on a particular document or what have you, well, you're already ahead of the curve because you're moving at such an advanced pace, because that's the kind of experience and road that we take our clients down, and we share that with you, and we partner with you, Aaron, to be able to make sure that's the experience for your clients.
Yeah, I love that. There's another thing that comes to my mind here, which I think perhaps some of the public share, which is and I know I wondered this years ago, what are some of the other differences, with, a broker relationship and the, lender like UWM in terms of, let's say, price? Somebody might say, well, what's the difference between, say a B of A or something and UWM that doesn't interface with the public? Are there differences in pricing and major differences in how you guys structure your loans and stuff?
You're absolutely going to find a very big difference. And you have to remember, too, that these very big companies also, and we are a large company as well, but we operate a lot differently than those folks do. But, all that advertising, all those things that you see, that's being paid for one way or the other. But what we afford to our clients, yourself, and then which gets passed along, of course, to your folks, your clients, is going to be that ability to, again, have options. So it's not, we are absolutely, we strive to be the best. That's the bottom line. But the wonderful thing about the broker community and the broker channel is that you have the ability to go anywhere. So depending on, hey, if this is a particular kind of a program that's going to require where we're not looking at their income, but we're looking at the, their deposits on their bank statements to qualify them that way, a bank statement loan, well, you can do that with us. You can do that with somebody else. So there's lots of different options. So in a broker scenario, you're going to be in the position to find the best fit for the client. And a lot of times that does come, that price and the dollars and cents, the numbers, that's a factor as well. But we, from our perspective, our goal is always, yes, we want to make sure that you folks, our clients, have the best ability to have the lowest monthly payment, the lowest numbers. But it is so much more than that, because the last thing that you want is to provide a very rough ride for your clients, meaning, again, Aaron's clients, his goal is always going to be to get them from start to finish in the quickest way possible with the least amount of hiccups and issues. And that's always the plan right out the gate. And so that's what we provide. That's where we really excel. But again, the wonderful thing about the broker channel is that originators like you have the ability to go pivot wherever they need to, depending on the needs or the goals of their clients.
Yeah. Yeah, what's funny, like I know you and I have discussed this at length, Brian, but one of my favorite things about UWM is actually two, but number one is speed, and the second is reliability, right? It's not enough to me to be able to take a loan and move it forward, but in the process, in many cases, you run into issues and problems. And when you're dealing with the right kind of lender that has the correct systems and processes in place, you're able to quickly get through those issues, right? Yep. Number one, because I'm working 7 days a week, but also because the systems and processes in the back end with UWM that Matt and the team have set up, right, are able to say, we either are not going to have any issues here because we're going to see them coming from afar, mm-hmm. or if there is, we have an issue to quickly get through them and boom, and move over. And we might not necessarily need to wait until Monday. We could fix it today.
That's always the goal, 100%. And again, it is the mortgage business. I always revert back to it's the mortgage biz. So there's a lot of moving parts. There's a lot of things that come into play, but the technology that we have set up allows us to be able to deliver that kind of client experience and partner with you to give that experience to your clients. And again, it really just comes down to choices. And our goal, yes, is to be responsive. Our goal is to pick up the phone. And if we're unable to pick up the phone, we call you back. I always tell my clients, which again are originators like yourself, hey, it's the weekend. I don't care if you call me, you email me, text me, smoke signals, whatever it takes to get to get to me. Please go for it, because I want to make sure that I'm there for you. And that's the goal, because you guys in turn are doing that for your clients.
Yep. I wonder let's talk specifically about the speed, right? So is there an average turn time for closings and so forth, and let's say approvals and closings with UWM as opposed to the rest of the market out there of mortgage companies?
Well, I can definitely tell you that I'm not privy to all that's going on outside of our doors, but I do know that we excel at the quickest turn times, and the quickest results from start to finish. So it's very, very common to have same day approvals with UWM. It's very, very common to have if you're not closing, or rather, if you're not getting an approval within one day, it's the next day. So it's extremely, extremely quick. So a originator like yourself is actually able to take a loan application, talk with their clients, have their disclosures signed to get the ball rolling moving forward, and have it actually with our underwriter that same day. As I like to say, by the time our head hits the pillow tonight, Aaron, this is going to be with the underwriter. And then the other piece is, how quickly can we get to the finish line? How quickly can we get to the goal? And what's incredible is that, bottom line is this: we, in the last, I think, quarter, we've averaged 13 and a half days for clear to close. That means from the time that loan is submitted until it's cleared by the underwriter, given that stamp of approval, that green light, whatever you want to call it, but you get that clear to close. That's our average right now. And that is, to me, that is something that is, I'm so proud of. And it's not just what we provide. It's the partnership that we have with our clients like you, because it does not work if our clients don't embrace the process, or as we like to say, run the play. If you run the play, you're going to be knocking it out of the park all day long. And why is that important? Well, I mean, as far as you're concerned, the ultimate goal is that absolute beaming smile on your clients' faces when they're at the closing table. That's what you want for them. And of course, you want to work with them again. So how do we ensure that we're going to be able to deliver that kind of experience? Well, that's with our speed, with our ease, and our technology. Everything that we have affords you the ability to do that for your clients.
That's great. I love it. I want to touch on some of the questions that I receive like on a pretty regular basis. One of these is, I think it seems to be becoming more common today, but this is in terms of a buy down. So I don't want to say this myself because you're a senior account executive with UWM. So can you explain, like in pretty simple terms for like the average person, what is a 2-1 buy down and when would be a good time to use it?
Sure. I can talk specifically about a 2-1 buy down, but in general, these are temporary buy downs, and there's several different options. So there's a 3-2-1 buy down, there's a 2-1 buy down, there's a 1-1 buy down, a 1-0 buy down. And what these actually are they're programs where you're actually buying down the rate for a temporary period of time. And it is something that it's not unlike somebody buying down their interest rate with discount points. So they're paying a cost to get a lower rate. So it's similar in that, but it's not quite the same. So and it's also similar to an adjustable rate mortgage, but again, not quite the same. And I think especially in this kind of environment, I think it's a more it's definitely a product that I think is better for the client right now, and only from the standpoint that a temporary buy down, you know what you're getting. So if you're doing a 2-1 buy down, let's say and I'm just making up numbers here, but if the interest rate is the end result interest rate that we're utilizing is 6%, then that first year the rate will actually be 4%, and then the second year it'll be 5%, and then the final rate, that 6%, kicks in at the third year. And the reason why I think it's a very, very attractive, loan product is because you know what you're going to get. Whereas an adjustable rate mortgage, you don't know necessarily what you're going to get. There are caps on those particular products. So the rate can only go up so much per year, or only so much, over a period of time. But it still has that unknown factor. Whereas the temporary buy down, you know exactly where you're going. You know that first year your payment is this. You know the second year it's this, and that third year, and then throughout the life of the loan, this is where it's going to be at. And people like that. They like that knowledge that it's not a mystery. It's not a gray area. This is the black and white facts. This is what we get. And right now, it is something that's been definitely very, very attractive and very popular to clients because of the fact that, listen, we got a little spoiled with those phenomenal, crazy low interest rates. And I will tell you that where we sit today is still historically, we're in a very, very good place. But if you're comparing it to the twos and the threes of the COVID era, it doesn't quite look like that to people. And so what's nice is the fact that they're actually able to harness a lower payment, and it's gradually going to go up. And the other piece of it is that we also, I mean, listen, there's no guarantees in life, but a lot of us, without our crystal ball, feel that within the next year, 2 years, we're going to see rates come down. We're going to see an opportunity where people can refinance. But people do like the predictability. They like knowing where they're going with their payment. And it's also something too. But listen, a lot of people, they're buying their first home, and this is the biggest purchase they've ever made. It's the biggest obligation that they've ever had. And so they have the ability to ease into that payment. And we all hope that we're making more at our, more income next year or the year after that. So that's how this all ties in together.
Now, I wonder, I love that. I think that's a great explanation because I get that question so much. Hey, what is this thing called the 2-1 buy down? What does that mean? One question that's a follow-up question that I get a lot is, isn't it the seller of the property that pays for that buy down? How does that work?
That's the most common route with the buy down. And so what that means simply is that as you're describing, Aaron, is the seller is going to, most of the time, and there's other options, but it's most common to see the seller in that real estate transaction paying for that buy down. So that's that cost, that rate to where it needs to be, so the payments lower the first year, the second year, so on and so forth, is going to be through seller concessions. And this is absolutely something that's very, very popular right now because the market has changed, right? It wasn't that long ago that we were really, we were facing an extreme seller's market, which there's nothing wrong with. But for the buyers, it was tough, right? Trying to get those offers accepted and offers over asking price and all this stuff. So that's a whole nother rabbit hole that we can go down. But the bottom line is that you actually have a situation now where it isn't that kind of a seller's market as it is. There's definitely plenty of areas where inventory, meaning homes for sale, are more scarce. So I mean, every market's going to be different. But overall, not only is the buy down attractive for the buyers. We call them the borrowers in the mortgage world, but on the real estate side, everybody else is the buyers. But so not only is that wonderful for the buyers because they're able to maintain that lower payment and know what to expect, but on the selling side, it actually allows for the seller to have something that makes their home a little bit more attractive and a little bit more saleable. So it's kind of a win-win.
Yeah, I love it. It does seem to be a very popular product right now. And I just wanted to get that out there because I get this question so much. And I think it's a good thing. I think it is, maybe you can share your thoughts on this. I don't think that the 2-1 buy down is necessarily for everyone. Maybe a permanent buy down, right, is better in certain cases, but it can definitely help the right folks to get a lower interest rate for a time and therefore a lower payment.
Absolutely. And the length of time somebody might be in their home. This is going to also be something that's going to factor into their decision as to which way. Are we going with a temporary buy down? Are we going to buy the rate down permanently, as you said, where we're just simply buying it down and it stays there? So when I started in this business, I was told in training, and this still holds true to this day, every loan is like a snowflake. Each one is different. So not only that, but everybody's different, period. So every situation might dictate something a little bit different. So, but again, that's where the broker world, a mortgage broker like yourself, that's where you are head and shoulders above the retail folks, the banks, those kind of those crowds. They're fine, but they don't necessarily have the options that you have. And so that is, so again, so that just, this all ties back into what you have available and to finding that perfect fit. Because again, if every loan's a snowflake, everyone's different. Well, guess what? That means that, lender A might not be the best fit for this particular client, so on and so forth.
Yeah. And especially in a market like this, like you mentioned earlier, right now we seem to have, lower inventory. We have rates that are still historically low. Like, when your parents and my parents were buying a house, the rates were 13 to 18% or something, right? I mean, it was disgusting, but maybe they're higher than some people would like currently. So you want the ability, at least I want the ability, to be able to pivot and be able to help my client in the best way and not sort of put them in a box and say, well, these are the only options that you got.
Yep.
Whereas in this particular case, right, that's filling a need because I can say, I have exactly what you need right now, right?
Oh yeah. And having options is wonderful. Sometimes too many options can be a little bit overwhelming. I don't know about you, but I have a difficult time ordering a meal in a restaurant when the menu is so vast. But ultimately, what it comes down to is that you, as the originator, you're gathering the information from your client. You're basically taking an overview of where they are, where they sit, where they stand, and what do they need. So it's not necessarily that you're going to, roll out this insane menu or this list of options, but you're going to, as some people like to say, suss out what it is that they need, and that's your job as the mortgage broker, as the lending professional. That's what you do on a day-to-day basis. And that's why it's not overwhelming for your clients.
Yeah, I love it. Well, just a few minutes left here. I want to touch sort of on a broader perspective here. Because I know UWM that, has a lot of investigating and a lot of knowledge centers here to look at the broader economic perspective. What are you guys talking about right now as a company in terms of, what we expect to see, what's most likely to occur for the rest of 2023 and going into 2024?
It's very interesting to, and listen, like I said earlier, I referenced a crystal ball. That means that we can't predict the future, of course. But I will say that our feelings we're feeling very, very strong that within the next couple of years that we're going to see an opportunity where a lot of folks are going to be able to harness some even lower interest rates. And plenty of homeowners out there, they're sitting pretty with a very, very, very attractive interest rate from, the COVID years, so to speak. But there's been a heck of a lot of real estate activity. So people in the 7% range, in the 6% range. And we do believe that there's going to be that opportunity where rates will drop. And there's that ability for everybody to not only harness that lower payment, but open up the door for more opportunity. So it's hard to say when that will happen, but I know Matt Ishbia, our CEO and president, just that's his feeling. And I'll tell you what, this guy's spot on. Everything that he predicts seems to come true. When we were at home for a very brief period of time during COVID and not working in the office, and it was a very small window, when that happened, he was telling us, listen, this was what, March, April of 2020. And he told us, listen, third, fourth quarter, it's going to be the best ever in the mortgage industry. And we're sitting at home and we're scared. We're unsure of where we're going, not just professionally, but just life in general, because it was such an odd time. And to hear that, it sounded fantastical. It didn't sound real, but at that point in time, I'd only been with UWM for about a year and a half. But anybody that had been with the company said, I'll tell you what, Matt says stuff and you go, how could that be? No way. And then it happens. And so I'm not saying the guy's clairvoyant or what have you, but he has such a finger on the pulse of what's going on out there. And what he said was exactly 100% true. So, so that's our vision right now. We're working towards that next point in time where people are going to be able to take advantage of lower payments, lower rates. But the goal as we stand currently is to be able to continue to provide the best client experience you're our clients, but it's hand in hand because you're connected to your clients. So we want to make sure that you have that avenue so that your clients love it, and all they can say is how phenomenal of a job and how wonderfully taken care of they were by Aaron. That's it. That's our goal. If that happens, then we've done what we need to do. And our goal is to continue to help the mortgage, the broker channel grow. And incidentally, I mean, what's incredible is that you can go to findamortgagebroker.com and all across this country, and you can find a independent mortgage broker that's going to be by you and take care of you. And that is the wonderful thing that we continue to try to push and propagate is, there are these wonderful brokers out there that have these opportunities for you to find the right fit for what you need. Findamortgagebroker.com. It's wonderful.
Yep. It's all about options, right?
Yep.
Providing the right options for the right scenario and solving the right problems or getting to the goal in the best possible pathway toward that goal.
Yep.
Right?
Absolutely.
Yep. Awesome. Well, again, Brian, thank you so much for taking time out of your day today. I know it's a Saturday, but yeah, this has been great. I really appreciate you so much. And we'll see you guys on the next one.
Hey, thank you so much for having me, Aaron. I appreciate it. Take care.
Okay. Take care.
Bye-bye.